Alright guys, welcome back. This is Kumani from Winvest Capital. As you guys know, my in the last video my mic had some troubles, and that's the reason why I haven't been posting for so long. But I have a new mic and the quality is much better. So from now on I'll make weekly videos about the trades we are taking and the setup we are using. So I hope you guys learn from this, and without further ado, let's go over to the Bitcoin market update. In the last video I already told what we would expect, and it made a run higher, but from the monthly time frame we'll break it down to like the 4-hour. So first what we do is we chart the market structure, and it's pretty clear that this is the bottom of this range. Went up to like this high over here, where it made a liquidity sweep. It already made a sweep over here and it dumped, came back up, made a sweep over here, made another sweep right there, and that is the high, because this is the new high. Let's use this one. Because this is the new high, the inducement changes from here over to here. So we'll mark this as the inducement. The inducement is another word for the pullback. IDM. Yeah, and you see that it made a sweep over here. While it made a sweep, it went below this previous candle, so it swept the IDM, which would where we would consider to enter on a order flow or order block. Here you can see a order flow. I don't think it tapped though. Yeah, because I think it went for the imbalance right here. Because I like to keep my charts clean, I don't really mark the imbalances, but yeah, it hit the imbalance right here and made a run to the upside. This will still be our valid order block or order flow right here, but the order block is, in my opinion, more powerful, so we'll keep it at that. When the IDM has been swept and a candle body closes below it and it makes a run up, that means that it's likely that will pull back from either the first pullback, the first order block that would have been here. I think I marked this in the previous market breakdown as well, but as you see, we no, I have to correct myself. This is still the monthly candle, and if it closes above this level at 49,048, then it would have broken this candle and will make a run higher to this order block right here. As you see, it didn't really tap yet, but it's likely that If it closes above it, then we'll make a little run higher and get a pullback from this point right here. Yeah, when we get a pullback from here, it's most likely that we either go to this first order block, or it could go to the extreme point of, wait, I have to draw it right, or it could go to the extreme point of this structure. And that's right here. This is a hidden order block because it uses a bit of the last wick here that isn't mitigated. But I think it's very likely that we could hit this order block right here. This is the first order block from the structure, which we haven't tapped yet. So I'll delete these two. And if you look at the previous structure, you can see from here, this was the previous high, then it made a pullback. A pullback. This is the range low, and then it made a run up. So if you take the line, if you create a line like this, then you'll see a zone where you could buy at a discounted value. So it's highly likely that we'll go back to this range. We could now go to the weekly chart. On the weekly chart, you would see what I have marked in the previous breakdown. Here we could refine this order block which we had on the monthly and make it like this. It could have been an order flow like this, but it got mitigated by this candle right here. So this would be the valid order block where we could see a pullback. Also here, this would have been the refined order block, and you can see that when it tapped, it made a sweep over the order block to stop out retail traders and made a little pullback down, where it made a run up higher and it broke above this. So it's highly likely that we go up still a bit. Let's see, because this is the major resistance, then the IDM would be like this, and here you could have seen the last order block, last valid order block, where you see it respected nicely. It went up and up again before it made a sweep below it and closed under it. When we look at the level here, then you can also see that this would count as our order flow. And if I would mark an order block in it, then the last valid order block would not be this one, not that one, not even that one, but this bearish order block right there, because that one is unmitigated. And we'll mark it like that. could also take a look here and let's see, is there another order block that could potentially be our extreme order block? No, I think this would be it. This is already mitigated, so we can't use it as order flow. Yeah, this way we still have pretty much the same as what we had before, but with confirmation that it broke above this order block right here, which would take us a bit higher before we get a pullback down to the, let's say, 12,000, 10,000 level. Yeah, let's go to the daily chart. In the daily chart, we can see that here it made a break of structure. This would be the major support, and while we're at major support, we would look for the first pullback, the IDM, and that would be around here. While this is the IDM, then our first valid order block, that will be this candle right here. As you see, this may be the last candle, the most lower candle, but it's mitigated by the candle next to this candle right here. And because it is mitigated, as you can see, if I zoom in, the candle wick is mitigated by this candle right here. This is an inside bar, so this one doesn't exist. But because it is mitigated, then we tend to go over to the next candle and see if it is mitigated. And this one is not, so this would be our valid order block. So yeah, the trend is up. So that would mean that we could look for a long position, and then we could mark it like this, just below the order block and to the high, and that would give us a 1 to 8 risk reward. Yeah, we could also break it down to the 4 hour if you'd like. I'll remove everything. Then it's pretty much the same as we did just now. Here we see the high of the structure. Here we see the low, and this means that we're in an uptrend. Then we would look for the first inducement. There we go. Yeah, our first inducement, that would be here. I can see a order block right here, but I think this one isn't valid because this candle mitigated it already. So that would mean that we will look for one below that. This one right here, this is our valid order block. No order flow. And for this structure, this would mean this would be our major support. And let's take a look. this would be our order flow. And to refine it a little bit, we can see that this is an inside bar from this candle. It got mitigated by this candle right here. That is an inside bar. You really have to train your eyes with this, guys. But this would be our next valid extreme order block. And we only enter from the first order block or the last order block. Everything in between, that is a smart money trap. So if you would have marked this one right here, that will be a smart money trap. If you'd mark one over here, that would be a smart money trap. The one on the upside there, that will also be a smart money trap, because there's a lot of liquidity, as you can see right here. As I said, I don't really mark the imbalances, but the imbalances, you can see those as magnets, and price often tends to go towards the imbalances just to fill them and take up some liquidity to go higher. And if you have marked this as your possible trade, you could also take this one, take it to there, or even from the extreme, either order block or order flow. I would like to go for order block, a little bit under the order flow area and to the high, and that's right there, and that will give you almost a 1-to-13 risk reward. You could also be a little bit more conservative with your stop loss and say take it a little bit below the major support, just to give it a little bit more room, but that would also hurt your risk reward. And you see that it's now turned into 1-to-6.88. So yeah, that's basically what we're seeing right now in Bitcoin. I hope you guys thought it was informative, and we'll see you in the next one.